What's up? Dennis here from primetraders.com. I'm the lead trader and founder of this beautiful organization we're running, this beautiful and exclusive trading community in which we turn ordinary people into extraordinary and real traders. So, in today's daily primer, we will be going over your best and worst friends in Forex trading. Now, we're going to skip through this video quickly because, as you know, the daily primers, and if you don't know, are little videos designed to provide specific education every single day of the trading week. Now, let's get this going. Show me your friends and I'll know who you are, or I'll tell you who you are. Now, in this video, we're going to be going over your best and worst friends in trading. But before we get there, let me explain something. In trading, there are things that cause you to win in the long term and things that cause you to lose even your whole account in the short term. There are ways to manage risks, and of course, there are ways to purely gamble. And we do this all the time. Well, not we, but generally people. There are ways to think that will make you unbeatable in the markets. And then there are ways to think that will make you quit and even give up. It comes down to mindset. Now, you can just take trades based on your feelings, or you can actually use a complete trading system based on time-tested principles that have proven to work and succeed. You, my friend, you need to choose carefully, very carefully. Now, let's get this video going. Your best friends in trading. Now, I could have really listed a lot of things here and on your worst friends and on your best friends, but I just tried to focus on the main parts. So, let's start with the best friends. The best friends are study. Studying the markets to understand what works is essential. Understanding of what works comes from experience, comes from training, comes from checking the charts without even opening a trade. You need to invest time into studying, and I pretty much do that throughout the day, but Sundays are my Mondays and I really spend a lot of time understanding the markets. I use multiple time frame analysis. I use the 3 pillars of the prime traders analysis process, which is checking the past, the present, and the future, explained in other primers. Just head over to our blog on primetraders.com and check it out. Number 2, self-control. You are comfortable with uncertainty because guess what? Trading is based on, it's full of uncertainty. You know why? Because no pattern is ever going to work out 100% of the time. Head and shoulders fail all the time. Resistances levels get broken, get fake outs, get crazy things. So there is uncertainty and you need to be comfortable with it. 3, structure. You need to have structure in your trading, starting with your position sizing. One way to do so is to use 10% of your balance. And as your balance grows, your position size increases. And as your balance drops, your position size increases. For me, I use 10%. So if my balance is 10,000, I'm using 1 lot. As my balance is growing to 11.5, now my position is 1.15 lots, if you get what I mean. It grows and decreases with my balance. So if my balance drops to 9, I'm opening 0.9. This is just what I'm comfortable with. And this is a major update that's coming to the prime traders position sizing to the structured position sizing of prime traders. 4, retention. Well, my friend, you need to manage risks very carefully on each trade. It's not just about converting pips into profits. It's also about retaining those profits. It's very important. You know why? Because you can earn thousands of percent in a day, in a month, in a week, in a year, but you can always lose just 100. 5, thoughts. You need to think in probabilities. This is extremely, extremely important. What we do at primetraders.com is we teach people to understand that there is always 3 things the market can do. And then based on that, more probabilities open up. So Euro USD can go up, can go down from the current support level where it's at, or it can trend a little bit sideways and then move up or down. So if we say up, what it could do, the probabilities is it's head straight to our take profit, breakout and retest, and then go to our take profit, breakout and fake out and go back down, right? And there's so many probabilities here. So we need to be thinking in terms of probabilities. Next, discipline. You need to have a trading plan. At Prime Traders, what we do is we create a trading tactic. So we follow that tactic, but we use proactiveness. So we become proactive and what we do with that proactiveness is we decide what we're going to do as price moves. So essentially, we are reactive to the chart. As the chart moves and new candles come out, we move with it. And finally, we decide based on being proactive what we're going to do about it. Now, of course, discipline is one of your best friends here, because sticking to your trading plan and your trading tactic and your system and your exposure and your structured position sizing and so forth is vital to your success as a trader. Next up, losses. Yes, losses are one of your best friends because accepting them will help you retain your money, your balance, your equity. You know what? I'd love to take 9 losses in a row, small, manageable, 2-3%, 2-3%, 2-3%, and boom, compound the hell out of the winner, and I'm up 10%. Next up, tactics. A plan on exactly how you will trade. This is exactly what we do at Prime Traders. For example, right now we're buying Euro USD and we're thinking in terms of probabilities. We're using structured position sizing. We've got self-control. I mean, you can hear it in my voice. I'm not worried. I'm accepting the fact that I might lose money on this one because the NFP is coming up. And finally, your best friend of them all is your trading system, a robust trading strategy. That little thing that puts everything together. Now, on the side of your worst friends, and believe me, if you hang around with 5 alcoholics, you're going to be the 6th. So if you hang around with just 2 to 3, 4, 5 of those little things we're going to be speaking about right now, or points, well, my friend, you're going to be a loser in the markets. So the first one is fear. You're scared to enter a trade. You can't be scared. If you're scared, that means your system's not right. You're not trading correctly with structured position sizing. You don't know where the hell your exit is, and you're probably losing money already. So fear is a big no-no. Number 2 is ego, feeling the need to be right on every trade. I think that's a really big problem. Your ego should be get the hell out of your trading terminal, mind, and so forth. I can put it to you like this. In January, we won 67% of our trades, which means we lost 33% of our trades. 33% of our trades. It was about 40. We opened more than 100 trades in January. That means over 40 of them were losers. That's fine. Number 3 is impatience. Entering a trade too late or taking profits too soon, or entering a trade too early, right? Impatience is a big problem. Relax. What I do with taking profits too soon is I just move my stop losses into profit. And if the market reverses and hits them, hey, I'm okay. I can always find a new trade. Next, greed. Trading too big a position size and not taking profits after a reversal. You need to remove greed from your trading. Yes, your purpose in the markets is to make money, but it's also not to be stupid. And being greedy is being stupid. And next up is randomness. Randomly entering positions and exiting with no plan or any kind of method. This will cost you a lot of money. Perfectionism is the next one. Waiting to enter or exit a trade absolutely perfect. That's rarely going to happen. So forget about being perfect. And forget about having a perfect trading history or track record. 0% drawdown, 100% win ratio, blah, blah, blah. Forget about that. I don't mind having a 2% win ratio as long as I make money, because my whole point here is to make money. I really don't care about being right. Now, before last is risk, being scared of losing money and not understanding that trading is first risk and then reward. Get that in your head. Trading is risk versus reward. That's what it's about. So is life. And finally, lack of skills. Not spending the time to master yourself and create a complete trading system. Now, if you're watching this on YouTube or on our blog and you're not a part of our community or you're on a trial with us, well, our whole point is to provide you the know-how, specific know-how, and then turn that know-how into, provide you with knowledge and then turn that knowledge into know-how and real skills, which would make you a real trader. On the other hand, if you don't have too much time to trade, you can always copy one of our trading accounts. Get in touch with us and we'll explain. That's it for today's daily primer. I hope I explained everything of importance. Remember, Stick around with your best friends because your worst friends are just going to cost you money. Bye bye now.